Good morning, everyone, and welcome to MorePay's webinar on payrolling benefits in kind. I'm Hannah Booth, the Content and Communications Manager here at MorePay. So we will start off with some quick housekeeping. In terms of the agenda for this morning, Sybil will start off by providing an overview of payrolling benefits in kind, and then she'll look at the new timeline and key dates that you need to be aware of. She'll also discuss some critical considerations in the run-up to mandatory payrolling, and then she will move on to loans, accommodation and other tricky benefits. Finally, Sybil will also look at potential changes on the horizon before handing over to my colleague Leanne, who will discuss how MorePay can help you through these changes. And then, as usual, at the end, we'll move into our live Q&A session. So, in terms of the Q&A session, you may have noticed that your microphone is on mute, but we do want to hear from you. So please drop your questions into the question panel as shown here. Now, we've had an incredible response to this webinar, and I imagine that we will have lots of questions, but Sybil and Leanne will do their best to get through as many as possible. And we will be sending out a recording of the webinar and also a copy of the presentation later on today. So you will have that to refer back to. Now, before I hand over to Sybil and Leanne, I'm conscious that we will have some people on the webinar this morning that aren't familiar with MorePay, so I'll give a very brief introduction. We provide payroll and HR software as well as outsourcing services to UK businesses. We've been around since 1966 and have all the accreditations you'd expect. And our promise is to make payroll and HR easy. And here's how we do it. We've built payroll and HR software that's easy to use. We deliver quality outsourcing options, and all of this means worry-free compliance for businesses. On the side, you can see some of the businesses who trust us to take care of their payroll and HR. And we're also award-winning, and on this slide, you can see some of the industry awards and shortlists that we've picked up over the last couple of years. If you'd like to find out more about us, then you can simply drop me a message in the Q&A panel and I'll arrange for one of my colleagues to contact you. So moving on to our presenters for this morning, I'll start off by introducing you to Sybil, who I'm sure you'll recognise if you've attended any of our payroll webinars in the past. Sybil is our Group Product Legislation Manager at Zellis Group, which includes MorePay, Zellis and Benefex. She's a self-described payroll geek with an obsession for payroll and HR laws, which she uses to advise and educate on everything legislation, both within our team and also externally. And moving on to Leanne. Leanne is our Head of Service Delivery and has over 15 years of experience in payroll and HR. And at MorePay, she leads our managed services provision. So I will now hand you over to Sybil to get started on today's session. Thank you, Sybil.
Thank you very much, Hannah. Just a quick note on the questions. We're not able to answer any company-specific questions, and looking at the numbers of people we have here today, we will try and get through, as Hannah said, as many questions as we can, but it may be that we need to take these away and send them out to you at a later date. So, as you all know, the mandatory payrolling of benefits was pushed back to April 2027. So, as an overview, you will see on the next slide just what's changing and why it's worth getting your preparations in now. So from April 2027, you will not need to register to payroll your benefits. Obviously, this excludes loans and accommodations, and HMRC will automatically remove P11D benefits from the employee tax codes. It will at that point become voluntary to payroll beneficial loans and accommodation, and from April 2027, from the 6th of April, employers will have to register to voluntary payroll these, before the 6th of April 2027. Obviously, right now that's still not open. So since our last webinar, the consultations have run. As yet, we don't have the government responses to the consultations. but they have done an updated technical note, which at the end of the slides you will have a link to, and that's just got a little bit more information about where we're going. So let's go over to have a look now at the benefits. Not too much to say about this, but the benefits, in my opinion, will outweigh the additional work that will need to be done month on month. We've listed a few on this slide, but there are many, many more. I think for me, the overarching benefit is that everything will be per pay period, rather than having to compile data at year end, along with when you're doing your standard payroll procedures. So just spreading the duties out throughout the year. It means the employees will obviously get their tax done in real time, so that they're able to manage their monies better and know what's happening with what they're coming out with. So we're going to move over now to this timelines. We've updated this since our last webinar. I was actually earlier on this week at a think tank with CIPP, and everyone there expressed the needs for comprehensive guidance and to get it as early as possible. And that wasn't only just for software developers, but also for customers and benefit providers. I do strongly recommend you speak to your benefit provider and ask them how they'll be supporting you with timely data and any process changes you as a payroll team or HR team will need to make sure that you can get as much data on time before your payroll's got to be processed. So this is the timeline that we now have. It has changed, as I say, since the last webinar. So HMRC are currently considering all feedback received from the impact that stakeholders have given through the consultation, and they're looking at drafting the legislation, guidance and technical specification. HMRC have given the dates April to autumn 2025, but we are already halfway through autumn. Draft legislation is also to be published alongside draft guidance for consultation. Again, they say autumn 2025, so we're hoping it's going to be soon, but they're not committing to any time frame. Around December, we're expecting to receive initial software technical information. But again, as everything's already slightly delayed, we're wondering whether that's going to be pushed back slightly. But then into next year, they've said that they will respond to a consultation of draft legislation and guidance to be considered around February to April next year. Next summer, they're set dating July, updated legislation and guidance will be published for everyone. Now, we are going to need primary and secondary legislation changes, and they are to be laid before Parliament in line with the Finance Bill next year. So that is going to be around the summer time. And they've said that the RTI technical specifications will be published in the second half of 2026. Now, this technical specification obviously is not only important to us software developers, but it's also important to employers, because it will show how we will be reporting each individual's NIC Class 1A contributions. That's actually, as you know, the employer contributions, but it is going to be reported on the FPS, which is for employees. Then we've got the voluntary registering for payrolling of loans and accommodation. They're expecting that to go live at the end of next year. And then obviously from April, mandatory payrolling of benefits and the voluntary registering for the payrolling of loans will become live. So our next slide shows the process to register to payroll voluntarily. So currently, if you are still doing P11Ds and are thinking of changing over early, you will still need to register to voluntary process any benefits, and you have up until the 5th of April 2026 to register to be able to do this next year. If you do not register beforehand and you're not already registered, then you are not able to do this. You then still have to stick with your P11D process. You can also payroll one benefit and still P11D another. That's perfectly fine. But do ensure that your employees are aware of it. And if they need to do anything or if they need any information, remember, tax affairs are the employee's responsibility. So if you are starting a new benefit, they can actually ask HMRC to add that to their taxable pay or their tax code next year if it's still being P11 deed, before you then send the information the following year. And that just means that they don't get the double hit from the following tax year, which is currently how it works. So we're going to move over to the next group of slides now, and we're going to look at some calculations. For those of you that have joined us on the previous webinar, you'll see that these are still the same calculations, because it's the easiest way for me to explain rather than just sitting here talking. We can give you some visuals as well. So the first example here is quite a simple one. There's no change. You know exactly what your year figure is going to be. You just happen to have everything exactly aligned. So you've got this medical insurance with an annual figure. Then you divide it by the pay period, and that gives you the amount that needs to be added to the tax for your employee to ensure that they are paying the relevant tax on that. So the taxable amount of the benefit in kind is added to the payroll taxable gross. So not to the payable gross amount, and it's usually known as a notional element. So if you don't run a monthly payroll, do not forget to check how many pay periods there are in that tax year, because not every tax year, as we all know, has got 52 weeks. You could have 52, 53, 54, 56 weeks. So do make sure that you make that calculation every year and check your payroll calendars when you're doing it. So the general rule is that employers will need to divide the cash equivalent of the benefit in kind and expenses they'll be providing across the number of relevant pay periods. As I say, there are other numbers of pay periods available. If you just happen to run an annual payroll, maybe you've got one director that's got expenses, then the full cash equivalent will be payrolled and will not need to be divided. So you just see in this simple example here, the amount of 6th of April is £752.52. They're paid monthly. So that gives £62.71 notional pay, or weekly, 52 weeks in the tax year. You've got £14.47 for 51 weeks and 1 week at £14.55. So we're going to go over now and have a look at the changes mid-year. And I say lightheartedly, this is where the fun starts. So you may or may not know that the income tax pay as you earn, so that's ITPA, Amendment number 4 Regulation 2015 actually contains the steps to follow for this calculation where there is a change mid-year. So there's no excuse that it's an interpretation, and it's actually quite simple to build it onto an Excel spreadsheet to have yourself a calculator if you need to. To calculate the new annual total, subtract any amounts already added to pay, divide by the difference in number of remaining payroll. So here's our example again with this annual amount of £752.52. The monthly payroll at the beginning is £62.71. Then it changes in September to £800. Now the employee is already paid £62.71 times 5. The new premium will be the £800 less already paid, £313.55. So that leaves £486.45 left to tax for the rest of the year. Divide that by 7. You've got £69.49 for 6 periods and 1 period at £69.51. So you don't need to make notes. We will be sending these slides out so that you can have a look at this again in more depth. So we're going to have a look over at the next slide for the correction for year end. This is where the employee is still employed, but the final payroll of the year has been run. So you will need to make the adjustments in the April. You still need to calculate what was due and what was actually paid, then subtract the difference in the new amount in the April calculation, and the legislation for voluntary payrolling does allow for this. So here, our example, we have the company car. Now the old car was £4,000 for the year, but the new car actually £3,800. Car changed on 1st of March, payroll notified on the 29th of March. So obviously it was too late to process. This needs to be taken down to days. So we had 329 days at 4,000 and then 36 days at the newer rate. And that gives the total taxable benefit. And remember to take into account days changed on a leap year and that the year starts on the 6th of April and not the 1st. So if we flip over to the next slide, we can see this calculation in action. So to make the adjustments then for the April figures, this person's actually overpaid tax slightly. So we've got the £4,000 and then a new rate of 3,980.27. Actually overpaid 1973. So this 1973 is carried over to April. So in April, you'll do your calculation. So here we're doing 12 payrolls. So it's 12 months, 3,800 divided by 12 gives 316.67 less the overpaid amount from the previous month. So for the April, the benefit amount is 296.94, and then going forwards, it will go back up to the 316.67. Now, if the new car is actually higher than the old car, then you'd add it to the payment rather than taking it off. So on the next slide, what happens if the employee leaves? If the employee is left and you cannot make changes in the payroll, then you have two options. First of all, report the excess amount on the P11D via the Government Gateway account. You'd report this in F and include all the card details as if you hadn't payrolled that benefit. Then for the amount that has already been taxed, you add this where the box is for amount paid by employee for private use. Or send an FPS adjustment for the tax year. Add the amount to the taxable pay or subtract it if it was an overpayment. So obviously if it's an overpayment, you have to do it this way, but do not adjust the tax paid amount. Employees can also make good in full so that there's no taxable benefit. So any amounts made good after the 6th of July will not affect the cash equivalent, meaning the benefit will still be taxable and NIable and cannot be adjusted by the employer. So fuel cards, when the actual cost of fuel is established, the employee can have until the 1st of June the following tax year to make good all or part of the cost when payrolling this benefit. This is because it may not be possible to have all the private fuel data by the close of the last pay period. You do need to make sure that you have an easy way for employees to report this data and ensure that they have all done so on time. If they miss this deadline, then you cannot make any adjustments. So we have some considerations on this slide also for payrolling benefits. Processes will need to be implemented to capture the benefit data on a real-time basis. If the data is required in real time for payroll, who's going to manage it and who's going to own the process, especially if it span across multiple systems or multiple locations? Can your benefit provider and how will they provide this information in a more timely manner? Calculations need to be made before the start of the tax year, and year-end set reconciliations will be required. If you provide company cars, you need to make sure your vehicle provider can tell you promptly of any vehicle change and also provide you with all relevant car details. The days of getting like this month's changes after the month are long gone. Providers now need to consider how they become proactive and how you as a team will become proactive. So your benefit team, HR team, whoever's responsible needs to make sure that when they negotiate changes to annual policies, the changes pass the payroll team as soon as possible, ideally before it's due to change, and not put them under pressure of additional calculations when it's months and months afterwards. You may also wish to do a full benefit overhaul. Do you go to a specialist benefit provider such as Benefex, or do you go out to individual suppliers? How are you going to receive the data from the employee and from the providers? How are you going to inform your employees in time as per legislation, such as the annual benefit statement that you have to send at the beginning of the tax year, rather than on the P11D style where it's after the end of the tax year? Are you also still going to give them a year-end statement for their individual tax returns? Or have you got it set up on the payslip so that it shows the year-to-date figures? Also, do you have loans and accommodation? So obviously, this will be a manual process outside of payrolling of benefits for now. Or will you take that leap come April 2027? Will you go into voluntary payrolling it? So next, we've got some considerations. PAYE regulations, 50% maximum tax. That also applies if you are payrolling benefits and applies to the cash amount before the benefit is added. So if you cannot take the full amount of tax, you carry it forward to the next pay period. Now, think about, will this be a regular occurrence? If it is currently on voluntary payrolling of benefits, you can remove them from the benefit payroll and do it, which you have to do online via payrolling services on gov.uk, and then put them back onto P11Ds. Under voluntary payrolling, where deduction of tax for benefits in kind and expenses, it means the tax payable is more than 50% of the employer's cash pay in that period. Employers currently have the option, as I say, to remove them from the benefit and go back to the P11D process, or keep payrolling them, carry forward the taxable amount to future pay periods in the tax year. And then obviously at the end of the tax year, HMRC will then have to reconcile any amounts that have not been paid, excuse me, and they will contact the employer directly. Sorry about that. As payrolling will be mandatory from April 2027, employers will be required to carry forward amounts to future pay periods. Any unreconciled amounts in excess of the 50% will be collected by HMRC. So that is in the future when this becomes mandatory. And they will collect at the end of the tax year via the existing end of year reconciliation, which is a P800 process, or via a simple assessment, where an employee is currently already registered for self-assessment. Unreconciled amounts of tax will be collected that way. So I mentioned about making good. The employee can reduce their tax bill by paying back part or all of the taxable value. When you payroll this benefit, you will need to adjust the cash equivalent, and it must be made good before the last payday of the tax year. But for many of you, that may be technically after your payroll cutoff. If it isn't made good by this point, the taxable amount must be added to the taxable pay in the final payroll. So this will need a robust policy and process in place to ensure that these rules are followed. The exemptions obviously for fuel benefits and credit tokens, and these are the 1st of June of the following tax year. So you need to review your processes to include how you receive instructions from your employee, how changes are passed to you by your provider, and how, as I've said before, pricing and negotiation and payroll is informed through after the negotiation periods. So as confirmed in a technical note following the autumn budget last year, there will be update process for benefit in kind and expenses where income tax and Class 1A NICs could not be determined during the year. In line with stakeholder feedback, HMRC recognises that there are situations where taxable values will but not be known during the tax year. For example, this could include fuel cards and employment-related loans and accommodation. In those instances, they say reasonable estimate will be required under the benefit value to be payrolled. The BIC update process can be used to record any under or overpayments of tax. And where this process is used, all BICs must be reported by the 6th of July in the following tax year, and the additional tax due or a payment will be taken into account at the year-end reconciliation process, the P800, via the self-assessment. And any additional Class 1A NICs due under this reconciliation would need to be paid by July the following tax year. As I say, we have a link to this technical note so that you can see this information there in writing. So where an employee or a director does not receive income from their employment or directorship, then their employer will be required to send details of the benefit in kind and expenses provided using the FPS and to pay Class 1 NICs due in the same way that applies to employees who receive an income. The difference will be going forwards that the FPS will need to show no payments of earnings and tax as none were provided. And any unallocated amounts of tax, so this is because we cannot collect tax in this situation, will be dealt with by their year-end process. But government guidance will be updated in the long run to reflect all this. So we have a slide next for loans and accommodation. It isn't really much for me, unfortunately, at this stage to be able to talk about. We were really hoping when we planned this webinar in that there would be much more information available with the timelines that HMRC had originally told us. But unfortunately, as yet, as today, the 6th of November, we don't have any more information on it. We just know that they're very complex. Obviously, those of you that actually really process them will understand that there's a lot of work to go in behind the scenes to be able to actually voluntary payroll these, and with all this making good that I've been speaking so much about. So let's have a look at the final slide that I have for you today. As we said, the draft legislation guidance is expected autumn. We are there now, so hopefully something will come through. We know that we've got RTI reporting and that is going to be expanded. We are pretty confident that the FPS will mimic the data that's available on currently on the P11Ds. Now we already have that there for company cars, but this will be for the other benefits that aren't currently broken down so much, so that we know they're going to be requiring additional information. We also need changes to social security legislation, and that is because national insurance is currently a company calculation and rounded at the final level of all values. It's not rounded at employee level. But when we go on to payrolling of benefits, a mandatory where we will be paying Class 1As in each pay period each month, then they're going to have to look at the rounding changes and how that's going to work, because each employee's benefits will have a value. Are they going to round it there, or are they going to round it still at the final company level? So this legislation is part of the secondary legislations that need to be changed. To say the main difference with the RTI from now until 2027 will be the extra fields. If you look at the P11Ds currently, there are free text fields. Currently, the FPS cannot have free text fields. So our questions are like, how are they going to do it? Do we have to tick boxes through the payroll software that will then fill these in? We are very confident, and they've confirmed there won't be any more information than already required, but there is still quite a lot of information that we needs to go on to that. They will be bringing penalties in, but they've said that there'll be a soft approach for the first year because they understand the complex areas of this change. So they're calling it a soft landing for the first year. Now, what isn't included in that are late returns and late payments. Those fines will still stand. And they're currently working on the penalty system to be able to give us more information next year at some point. So that's actually it from me for now. I am now going to hand over to Leanne just to have a look at what MorePay themselves will be doing.
Thank you so much, Sybil. That was an incredible amount of information for everybody listening. Now, as we've heard, this is an area of real complexity. It's also one that's going to be evolving over the next 12 months and beyond. We're still waiting for key outcomes on certain areas, such as loans and how they'll be handled. But in the meantime, I'm really pleased to say that MorePay will be here to support you and all of our customers every step of the way. As you've probably come to expect from us, we'll be providing expert advice, guidance and support around payrolling benefits and the key considerations you'll need to make as these changes roll out. We've been fortunate to have Sybil share her insights with us today, but this is just the start. We'll continue to share updates, including future webinar sessions, once we've had that formal guidance and technical information for everybody who would like more in-depth support. You'll also see new information being added to our knowledge base, so you can cross-check the details, understand the changes, and see how they'll impact your organisation. And of course, as payroll software providers, it's our responsibility to make sure that the systems and services that you use are trusted, reliable, and giving you the complete confidence in the process. We'll continue to review future changes and make sure that we're ready to support you. MorePay software, which of course is HMRC recognised, already supports payrolling benefit calculations and processing. So that means you can have total trust that your solution is accurate and compliant for your employees. And beyond that, our customer support and managed services payroll teams are on hand to help and navigate these changes by your side. We've got a number of options available to help you and our customers transition away from P11D services, whether that's through our managed service teams, a third party, or your own in-house team. We'll also be making configuration changes available based on your current setup. And additionally, we're developing new support packages for the future mandatory payrolling of benefits that will offer a different level of support depending on your own business needs. As Sybil mentioned, this is a great time to review your overall benefits proposition and perhaps even explore more flexible benefits that suit your organisation. Naturally, we'll be here to support you through any configuration requirements along the way. For those who'd like to communicate these changes internally, we're also providing communication packs. These are standard templates designed to help you explain the updates to employees clearly and proactively. They'll include a template for annual payroll benefit statements, as well as additional documentation for employees who want to submit things like annual tax returns. So whether you're looking for a fully managed payroll and benefits service, a complete substitute for your existing P11D process, or just need configuration support while managing these in-house, we've got a number of flexible options to suit your needs. If you'd like to explore which package or service might be right and relevant for you, please do get in touch with your account manager or your customer success manager here at MorePay, and they'll be happy to talk you through the requirements in more detail. In the meantime, keep an eye out for the usual knowledge resources and updates. You can subscribe through our customer help centre to make sure you don't miss any of those articles, and we'll continue to keep you informed throughout the upcoming year. And we're really looking forward to supporting you on this journey.
Thank you both, Sybil and Leanne. There was lots of useful information in there, and we will now get straight into the Q&A session. We have had lots of questions, so we'll do our best to get through as many as possible. So starting with the first question, during automatic application from April 2027, will employees see tax codes changed during the year from prior P11D, as well as being taxed on the payroll benefits? And what timescales are in place for this to level out so that tax codes are accurate?
Okay, so there are some myths around double taxation. Now, currently, when you P11D benefits, unless the employee rings up HMRC or does it through the tax account and says, I have this benefit, HMRC won't know about it until the following year. And they also then, for going forwards, will estimate tax for that year. So actually, when you start a benefit for the very first time, a lot of employees actually are then double taxed. Moving over to payrolling of benefits, your employees, if they are already receiving P11Ds, will already have an adjustment for current year within their tax code, which is an approximate amount. HMRC then update this once they receive the P11D to take into account any over or underpayment. Obviously, as we know, then the taxation will be on real time. So there isn't really much of a difference. The employee may have small amounts of adjustments, particularly if you've been telling them of the changes throughout the year and they've been active on their tax accounts. They have said that if employees are struggling because there was such a difference between their estimated amount and the actual amount, that employees can speak to HMRC directly and potentially extend the tax code reclaim. But timeframes, as a rule, within the first 12 months after transitioning over, everything should be flat then and come back to normal. So there isn't this double taxation as such, unless you say you've started a new benefit next year, you haven't advised your employees to tell HMRC, and as an employer you can't get involved in that, and then all of a sudden you're moving over, they would have a hict, but that's already there anyway. So I think it's get the information to your employees early, make sure that while you're doing benefits now, they have the information and that they're aware that they can give more accurate data to HMRC themselves throughout the tax year.
Thanks, Sybil. So moving on to the next question, do we need to do anything if we already tax employee benefits through payroll?
For when this becomes mandatory, then no, you are already doing it now. If you are, say, payrolling one benefit but not another, or if you are not payrolling any benefit, HMRC will automatically remove all benefits except for loan and accommodation from the 6th of April 2027 from employees' tax codes, and get in touch with employees who have any outstanding amounts at that point in time still. So in essence, no, you don't need to do anything.
Thanks, Sybil. So moving on to the next question, how are we going to payroll private fuel allowance as it's a month in arrears? Is there any guidance on what to do?
There isn't guidance yet. It is one of the things that we've actually actively asked through various channels, BCS, CIPP, etc., to make sure that HMRC give us guidance. HMRC at the moment are saying you use your best estimate. So if you have a rough idea and then make good the following month, not ideal, but unfortunately that's the way we think they're going to go. But they have assured us that we will get guidance on that area.
Thank you. So next question, if you decide to payroll benefits early, i.e. 2026, can individual employees refuse this?
No, this isn't an employee choice, this is the employer choice. The employer can remove people out of payrolling benefits, so you can register to payroll a vehicle, and if you know that somebody's already hitting that regulatory 50% limit already, you know you're not going to have the room to be able to take that tax, because we know car tax is quite a lot higher than, say, medical. You can then pull them back out, but it isn't an employee choice, and come 2027 it's mandatory.
Thank you, Sybil. Right, next question. If the employer picks up the tax cost for each employee's medical insurance, do you need to payroll the benefit? We add this to the employer settlement each year to ensure the tax is paid by the employer.
As far as I'm aware, this won't need to be added. So if you're doing it through your PSA every year, then the employer's covering that cost. Again, we hope that there will be guidance on unique situations, and we'll have to wait and see. But no, long as the tax is made good, they may come back with something else. but we can't be 100% sure yet.
Okay, thank you. Next question. If an employee has multiple benefits, is it possible to use a different notional payment for each one?
Yes, you would need to do that because the values are going to be different for each. So you may find that easier in your process to have multiple notional elements if your software provider allows it, because obviously I know we haven't just got more pay people on here today. So if your payroll allows it, otherwise if they don't, because there's no regulation to say they have to offer multiples, but if it doesn't, you'll just need to aggregate it.
Thanks, Sybil. So moving on to the next question. We pay for childcare, which changes on a monthly basis and always after payroll. How do we take this into account for each month?
So I presume that this is a variable benefit, again, a bit like the fuel cards. So it will need to be processed as a reasonable estimate of what it is, and then the adjustments will happen the following month. So it is going to be a little bit more complex than something, you know, that's flat, like private medical or a car that might have one change a year. Again, the guidance for these adjustable values and these variable values will be made available next year.
Thank you. So next question, would retirement gifts from an employer to the employee come under payrolling benefits, and are there any conditions for this?
You would have to look at the specific circumstances, you'd have to look at the specific legislation on that, depending on the gifts, on the values, whether you've got to look at the IT, but there's various different sections on whether it becomes a taxable benefit or not. So can't actually answer individual ones. I'd say just double check on the values on the different sections of ITPA.
Thanks, Sybil. And I think there's another question that are probably going to have a similar answer. So if an employer was selling old office equipment to employees, such as laptops, for less than the market value price, would they come under a payrolling benefit?
Actually, yes, if you're selling assets, because it's the way it's wording, and don't forget to minimum wage as well on that, only in use and benefit. But yeah, you have a look at IT from whether it's allowed.
Thanks, Sybil. So we've just got time for just a few more questions. So next question, we have a PSA. Do we need to start including the items we report through here as a payrolling benefit in kind instead?
If the tax is made good, again, I think this is very similar to the question earlier on. We haven't got the guidance yet on that, on if they're going to be insisting that it's going to be broken down by individual, or if the PSA is still going to stand. Again, I'm afraid we're not being able to answer as many questions today as I was hoping we would when we'd originally planned this webinar in, because the guidance just hasn't been released yet, I'm afraid.
Right, so we've got time for just one more question. So final question, we currently voluntarily payroll benefits and the year-to-date figure shows on their pay slips. Do we have to give the employees any other documentation at the end of this tax year?
Voluntary payrolling of benefits, it's actually the documentation to be given at the beginning of the tax year. So you have until June to give your employee a benefit statement. Now, the statement won't take into account any mid-year changes. So it is up to you as an employer how you give your figures, because you could potentially got a lot of people, or people that may have self-assessments, you don't know their tax affairs. So my personal recommendation is that either you have the figures on the pay slips as year to date, so you've got the accurate figures, or you give them a year-end printout if possible, or year-end statement that's got the actual figures. But requirements under the voluntary is that you give them a statement beginning of the year, and that will go forwards to mandatory. You have to give them a benefit statement. Now, what they've not said is how that statement has to be delivered. Can it be delivered, i.e. the employees on a portal ticked that they want that benefit? It gives the value, it gives the monthly value or the payroll value, and that is acceptable. We don't know, so we don't know how in depth, or do you have to give a letter?
Thanks, Sybil. So we will close the Q&A off there. Thanks to everyone that did ask a question. That's been really valuable. So before we finish, I will just point you in the direction of some useful resources. So we have got our knowledge centre, which you can find within the main menu of our website, and within there you can see our upcoming webinars. You can also listen to recordings of previous webinars, you can download guides, you can read blogs. So I would encourage you to go and have a look there if you haven't already. And if you'd like to find out more about our software and services, there will be a pop-up form once I close the webinar where you can register your interest, and then one of my colleagues will be in touch with you. So that just leaves me to say thank you very much to everyone who joined the webinar this morning, and thank you to Sybil and Leanne for presenting. As we mentioned, we will be sending you a copy of the presentation and also a copy of the recording to refer back to this afternoon. So thank you very much for joining. I will now close the webinar and we'll be in touch this afternoon with the resources. Thank you, everyone.
Thanks, everyone.